Hello, everyone, and welcome back to the Financial Insight Show. The year is 2026, and we're super excited to have our first interview for the 2026 event, as well as interview calendar. Today, I've got a very special guest who's a longtime friend of Financial Insight. He's a development finance expert who's already been on the show, who's going to be talking to me about a very interesting article that he just published. So stay tuned if you want to learn more about Zambia's IMF program and what it actually means in the broader perspective of things. So stay tuned, and as we always say, Financial Insight, get to know. Welcome back. So like I mentioned, we've got a very special friend of us, Savior, who is a longtime friend of Financial Insight. Savior, welcome back.
Thanks, Mo. It's always good to be here.
Absolutely.
Happy New Year.
And Happy New Year to you too. I know we're having our interview. This is, by coincidence, this is our first interview for 2026. So we're super excited to have you.
I'm honored. I mean, it's very hard to say no to Financial Insights.
Absolutely. And by coincidence, I think the last time that we actually had a chance to chat with you was last year on the sidelines of another major conference. It was Mining in Dava. You shared a couple of insights with us. But most recently, I think for our viewers, Savior published, an article which basically gave some perspective around what it means for Zambia in terms of, the IMF program that it's actually been on. So we're going to talk a little bit about, this paper. But before we get into it, what was the motivation for you to actually pen this? Because we know you always pen, seminal pieces for your LinkedIn, and we love to carry them on our platforms. But what motivated you to actually write this paper?
Yeah, actually, as you know, so sometimes economic concepts, not even sometimes, always economic concepts sometimes are not very easy to understand or to simplify, even by experts. And I noticed that usually when policy announcements are made by government officials or ministers, there's a difference between the intended communication and how the citizens, even the media, receives them or even understand them. So you find that there's a lot of misunderstanding and discrepancy. And also there's general low levels of economic literacy for the average person. So one reason why I sometimes, if I find the time, take time to write and sort of try and simplify as much as you can, it's very hard to simplify technical things, is to also bridge this gap in understanding between the technical issues and what it means for the public. What are the implications? What are the implications of GDP growth? What are the implications of forex exchange appreciation on the everyday household? I think that is the most important thing that the ordinary person on the street needs to understand. So it's not easy to get that immediately from a technical announcement or a press conference. So that's the first objective why I think I do actually enjoy getting feedback. And most of the feedback I get is that some people appreciate the simplification of the analysis. The second is that the economic reforms or the policies that government puts in place affect different sectors of our Zambian society differently. So the way it affects the private sector is differently from the way it affects the small-scale traders or small-scale marketeers or just the ordinary person. Yeah. So I think part of my analysis seeks also to break down the nuances, like what does this mean for these different types of groups? So it's not usually black and white. And people say, oh, is this a good thing or a bad thing? The answer is not yes or no. It's usually you have to really, it depends on whom you are focusing on. So these are the two main motivations why I think it's very important for others. There are a lot of other, commentators in the Zambian scene who are even much more better than I at simplifying things. But we need more of that so that people can get the real gist of what are the implications on their lives.
Right, and again, I must thank you for sharing the article with us, because we noticed that it garnered a lot of feedback. But from a Financial Insight perspective, we just want to get a better understanding from you. You highlight the need for a genuine recalibration of fiscal targets in Zambia's next IMF program, because we understand that obviously government's position is that as opposed to extending the current one, they would like to have a fresh one. What specific changes to the fiscal framework would you propose to create space for productive public investment without compromising macroeconomic stability, which has finally been achieved?
So one of the key themes for the IMF program, which finished, was that the government was required to really maintain a very specific primary surplus of not more than of at least 2% of the GDP. In short, it required very strict discipline, fiscal discipline, and to sort of cut spending so that you deal with the debt sustainability issues, which was well and good from the financial discipline point of view. But the implication of that is that then government ties its hand. It will not have the resources to invest in growth aspects, meaning in infrastructure, and also things like energy, infrastructure, agriculture, agro-processing, the key things that we need for the economy to grow and create jobs. So maintaining those targets, like 2% of primary surplus, is actually good for stabilization. But the next phase the country is moving in is a growth phase, meaning we need to relax those targets so that government can have more flexibility around that.
Right. Now, again, I think sometimes when we've chatted with with other economists, there's always this issue of how you can balance country aspirations as well as what comes out in the programs. How can Zambia balance the IMF's likely push for continued fiscal discipline with government's need to demonstrate economic delivery and relief to voters, especially in a sensitive year like an election year that we're having in 2026?
Yeah. So look, first of all, in an election year, all governments, there's a tension between, on one hand, governments wanting to spend because it's an election year, wanting to spend on all sorts of projects, including populist projects or promises that they've made because it's an election year. So that sometimes the risk is that it can force governments to, do away with their previous plans and, targets, versus saying, okay, we still have to maintain fiscal discipline. So there's that tension, and I think everybody knows that. So it's very politically risky for most governments to pursue austerity measures. However, I think the key thing is for governments to maintain a compromise and a balance. Where should government have more discipline, even if it's an election year? I think recurrent expenditures, so consumption-based, should be sort of disciplined. So we should make sure that we're not spending more of our money on consumption. But I think in terms of the capital expenditures, because that's where the growth comes from, you need to have a more flexible approach. Rather than just saying, we're going to spend X percentages and you stick to that, you need to have a multi-year framework that allows you across 3 or 5 years to really still spend the same amount of money over that period, but be flexible to change year by year. Our current process of budgeting is that you spend on a year-by-year basis.
Correct.
So even if the circumstances have changed, so for example, if you need to respond to the energy, you can't because you've capped your spending.
Correct.
So I think there is that. It's a dance. It's a balancing act. It's more an art than a science. And we've seen other governments that have sort of navigated this. The other approach I think we need to do is when approaching these programs, whether it's from the IMF or other funders, instead of saying, what does the IMF want us to do so that we comply? We should be saying, what do we need to do as a country and achieve? And then how can we get the IMF and other funders to support our agenda? Then you flip that, because then you are really approaching the relationship from a point of more broader strategic objectives, as opposed to trying to do something because you want to meet your debt obligation at the expense of larger long-term growth.
Absolutely. Now, the article also mentions the importance of protecting strategic industry policy space in the successor program. What specific policies or interventions do you think Zambia should prioritize to promote industrialization and job creation? And, I'm sure you follow the work of Zambia Association of Manufacturers.
Yeah.
They're really trying to push the, the manufacturing agenda, because that also offers, growth and, not necessarily a pivot away from mining, but obviously complementing what the success that mining industry is pushing. What are your views on that?
Yeah, there are 4 or few key complementary priorities. So one, for me, which is a starting point, is energy infrastructure. You cannot industrialize, you cannot grow the economy without energy. So I think investing in rolling out energy infrastructure could be solar, it could be other forms as well. And I think we can see some of that having been done in the last few years. That's the first priority. The second priority is agriculture, specifically agro-processing and value addition. The majority of our Zambian youth and Zambian population work in agriculture sector. It employs the most people. It's not mining in terms of jobs.
Right.
So really improving the productivity in agriculture by investing in new mechanization, building skills is very important. The third one, I would point to skills and human development. We have a lot of young people that are coming out of tertiary education that needs to be empowered with the right kind of skills that are fit for the purpose, that are for future looking. So that's the third one. And then lastly, I think I would also focus on really opening up the road networks, the logistics networks, and again we're seeing some of that happening as well, to unlock those areas in the rural areas and connect them to where the markets are, and vice versa as well. So these are the 4 key priorities. And in terms of budgeting, what you then do is you prioritize these key areas in the medium to long term. So you don't do a 1 year program, because change cannot happen 1 year.
Correct.
Yeah, and then you stick the course, so that whatever negotiations you're doing with IMF, make sure these are protected, that you still have the investment capital to invest in these areas.
Right. Now, your paper also, touches on, the issue around, stability. And you noted that, stability is necessary, but it's not sufficient for investment and job creation. What role do you see for the state in actively coordinating and promoting economic development in Zambia?
So I think with the practice of free market economies or neoliberal policies, most people say, oh, the government or the state has no role in the economy, they have to leave the private sector, which is well and good. But I think experience and evidence across Africa have shown that most countries that have genuinely developed homegrown industries, jobs, have had the state play an active role. So I'm not talking about states necessarily owning companies or nationalizing per se, but I think the state should play an active role in directing economic activity, creating the right incentives, and coordinating. So there are things, for example, that only the state can do. So if we're talking about energy infrastructure and things like solar and grid upgrade, there are certain policy environments that need to be put in place. Regulation, for example, making available investment that are not attractive to private sector, like in soft areas, like skills development or others, tax incentives. So the state's role is to coordinate those kinds of things that private sector cannot do, or that individual citizens cannot do on their own. And also to set a clear national agenda, so that everybody who wants to intervene or wants to work in the different sectors is clear on where the contribution should go. Yeah, so that we avoid policy incoherence. You avoid one arm, of the government pursuing this policy, which is negating another arm of this policy. So I do think that the government needs to play a much more active role in facilitating. I'll give an example. Even if you say like local content, like mining beneficiation, which is another priority.
Yes.
There's a new act now, right, which is obviously a progressive move, and it's a very welcome move. But it will not just happen by legislation. Suddenly, because there's an act, young people are going to now be, have the skills, the capacity, the capital to form companies and supply the mines. There has to be a deliberate sort of strategy backed by the government, including, for example, making cheap capital available for young people to train themselves on what it takes to supply the mines, get machinery, form up their own companies, understand business development, understanding what it means to run a business, so that they're not just having licenses without the necessary supporting infrastructure. That is the role of the state. That's just one example. You can extend that role in other sectors, like agriculture as well. Like what can the state do to provide things like access to technology, extension services in a new way. Now with AI and technology, we can still provide extension services in a much more easier, in ways that we didn't have before around that, to increase productivity. So we can go on and on about some of the key strategic role of the state in ensuring that all the good groundwork, like the foundation that has been laid, is sustainable and scaled up.
Absolutely, absolutely. Now, how can Zambia ensure that the successor IMF program genuinely reflects its homegrown priorities and development agenda, rather than simply accepting the standard template? Because I know there's been a lot of debate. What should the shape and form of the next program actually be? I think with the groundwork that has been done so far, this is a very unique opportunity for the Zambian government now to carve something that, like you mentioned earlier on, in terms of the growth aspirations. How do you think it should look?
So I think you touched on the right starting point, is a national development plan. In this case, we have the 8th NDP, which should be still the starting point, like we build upon that.
Right.
And I think we have to go to the IMF with our own ideas, our own drafts, as opposed to just accepting the template. So being clear on our own national agenda and not doing it for the IMF, We have to do it for ourselves first, but it should be the same agenda that we go with to other external partners, including the IMF. So being clear on what those priorities, and we spoke about some of them, but they need to be articulated, they need to be socialized across not just government, but across all the players, civil society, private sector, the media, so that everybody knows that the country is pulling in one direction. We can sort of have divergent opinions or differences on what are the policy alternatives to get there, but at least we should have one big vision for the country, regardless of the political cycles, regardless of who's in power, and indeed regardless of which external partner we're dealing with.
Right. Now, on a final note, I mean, obviously, with any direction that we go, there's obviously risks, that we need to be wary of. What are the key risks or pitfalls that Zambia should be most concerned about in negotiating a new IMF program, and how can some of these risks be mitigated? Because we know, Savior, that you've covered pretty much the entire world when it comes to countries that have also done programs and successor programs with the IMF. What should the Zambian government look out for?
I think it's anchoring our growth strategy on things that we don't have control over. So, which may include, external resources. I think we need really to build that sustainability where we have our own domestic resource mobilization, strategy, and then use the external resources as add-on or as just complementary. That's the first thing, because if you don't control something, but you're anchoring your strategy on what's out of your control, then clearly you're skating on shaky grounds. Yeah. So that's the first thing. The second thing I think is some of the risk is because of the political cycles, the electoral cycle is whenever you have a change of government, there's no policy consistency. Yeah, so I think we need to find a mechanism that works for us where we can be assured that regardless of the government in power, some of the policies are continued, and we build on already some of the progress. Yeah, like clearly in each subsequent government, not everything should be discarded, right? Yeah. So I think that sort of policy consistency, and it takes time for some of these policies, some of these actions to really start giving us returns. Education, for example, the investment in education, the returns to a country only starts happening after 15 or 20 years of actually investing in human capital. Right. It therefore means if you're then tinkering around and saying after 5 years, it's not working, and you change course, you're not then giving yourself the benefit of that advantage to reap the benefits. The second thing, I think we have to get ahead of the technology, of the new sort of technology world, by really investing in technology, negotiating technology transfers, even around the renewable energies, because it's very expensive right now. Yeah, it's not just saying let's import solar panel. We need to reach a point where we're actually making either components, if we can make all of that, and exporting to the region, but you also need to arm. We have an army of young people, youth who are technically savvy, but then we need that technology transfer to happen quickly to do that, because that's a new tool now for growth, for economies, is technology, even beyond mineral resources around that. So I'll pick out this sort of two strategic anchor, and also really the young people are the future, like investing in human capital, in the skills. I think the current education system is not fit for purpose. It's outdated. We need to seriously look at changing the curricula. We need to churn out young people that are not just looking to work in formal jobs, but that are looking to utilize their creative abilities to create things and really take advantage of what's going on with the rest of the world. Yeah. So I think if we only picked three, we don't even have to do everything, and be consistent, then we can begin to see some meaningful progress.
Right. Anyway, Savior, it's so wonderful having this conversation, and I always like throwing a bit of a bonus question, as if I can call it that. When you reflect back at the program itself, do you strongly feel that Zambia has pretty much made a case to be an example for other African nations that have obviously, or rather even third world countries that have been on programs and now are getting to the tail end, or some that are about to go in? I mean, what would you pick out where would be some of the key lessons for other countries in terms of how Zambia has performed? Yeah,
I think being realistic about the extent of the challenge, first of all. I think we all know, after 2021, the Zambia's economic situation where it was. So I think understanding that and being honest about it is one useful thing to do. Also managing people's expectation of how much time it will take to make the changes to recover, and also being very clear on communicating in a realistic terms what can be done in 2-3 years versus what would take time is a useful lesson for others. I think in Zambia, you've noticed, I think there's been some discontent among the population about just how long it has taken around that. But part of that, I think, is misaligned expectation of the nature of the problem. The second one, I think, is the debt question. I think what Zambia has done very well is to try and crawl itself out of this debt from default to resolving at least 90%. It's not yet finished, but again, I think that's an example of a country that has really stayed the course to deal with its debt issues. The challenge, though, is the gains that have been made. To what extent are they translating in meaningful material changes at the household level? Yeah, that takes time as well, but also people would have different ideas of if they're worse off or better off around that. Yeah,
absolutely. Savior, thank you so much for speaking to us.
Yeah, thanks, Mwelwa. It's always a pleasure.
Absolutely. So yeah, there you have it. We've been speaking to our good friend Savior, who's given us some insights on the paper that he just wrote. You can read his paper. It's available on the Financial Insight platforms, on our LinkedIn platform, as well as our Facebook and website. And it's been such a fantastic 2025 was such a fantastic year, when we're looking forward to obviously providing more insights such as this interview that we've had in 2026. So I have been your host, Mwelwa Kenneth Chibesakunda, and as we always say, Financial Insight, get to know.